Hi, this is Joe Rabo again. Want to go through, and before you can understand multiple time frame analysis, you need to be able to understand a single time frame and its trend. The key points about trend are knowing the direction, obviously. What is the direction of the trend? You want to know the strength of the trend, and you also want to know how long the trend has been in place. I think you can use price to determine all three of these gauges. I use MACD, I use ADX to really help me determine the momentum. I've spent so many years using those indicators, it just comes second nature to me. I think there's some very easy things to use with those indicators that can help determining the strength of the trend. But I want to show you, you want to be able to do this with price alone. If you can do it with price alone, then you overlay a momentum indicator, and it's going to make a huge difference, give you a much higher confidence level. I just want to start with this period. This is a weekly chart. I like to use weekly charts in my examples. They tend to have smoother trends. Not always, but that tends to be the case. Once you get down to a daily or lesser time frame, it's a lot of noise, and I think you ought to recognize that. It's part of the game. The lower the time frame, the more noise. The weekly kind of gives you I think the monthly has smooth trends as well, but they tend to be, they just take forever to change. The weekly gives you kind of a nice balance there. And I also think even if you're trading shorter term, you want to know what the weekly trend is. You want to have the wind at your back. So anyway, let's start with 2018. The stock sells off and makes a bottom here. By the way, I have overlaid on the price chart, I have overlaid a zigzag. If you go through, most software packages have the zigzag. I guess not all of them, but most do now. And I'm using a 5% wave on the zigzag. Very, very simple. You should be able to get this on. I kind of consider this sort of like training wheels for learning the trend and analyzing the trend. I don't use it anymore on my charts, but it was very, very helpful years ago as I was starting this. But I like to use it in the videos sometimes to really help you define what's taking place, because now we have a pattern of lower lows and lower highs developing, and there's a trend line break here. And so we start to move up, and the 1, 2, 3 change in trend is, you break the trend line, you make the higher high, and now you're making a higher low here. So this to me is the low point of signal. Once this turns up, I'm sorry, I clicked on the wrong one. Once this turns up, you have pretty strong evidence that the trend is changing. Once you take out this high, you're basically confirmed, and then your second higher low is again a very high probability entry for continuation to the upside, because you're basically at this point now in a trending situation. But you want to keep going through. I've mentioned this in the past and in my book. You really want to go through and spend a lot of time analyzing and having the ability to see these 1, 2, 3 changes. And if you do, it's going to help you in a huge way when you go into the multiple time frame analysis, because the lower time frame is going to do this all the time. And a lot of times it's not going to take this long to get the 2 and the 3. You're going to break the trend line, and it could happen really quick. So it's going to give you some really early entry points into the higher time frame. But you first, you got to spend time and go through it and be able to analyze it. And then we throw the moving averages on top, and it becomes that much easier. So, but let's just start with this series of higher highs and higher lows that are now in place. So each time you make a new high and then pull back, you kind of want to analyze the next wave. So this is sort of the measured move off the low. You had a really strong drive off the bottom without a pullback along the way. So you went from about 70 to, say, 86. So that's about a 15-point measured at the bottom. So typically when you see that, and that's the point that breaks the trend line and you have the follow through, after a pullback, I'd probably be adding, I would say at a minimum, I'd be adding another 15 points. You could do it in percentages as well, but I'd probably be adding another 15 points and say, you know what, the next leg is probably going to be about 15 points. So this was what, about 78 up to say, 97 or something like that. So not quite the full measured move of that run, but obviously there was more follow through. We have an uptrend. So what I want you to do is I want you to think about comparing each wave, the length of each wave. Because in doing that, you'll get a much better idea without any kind of momentum indicators. You can get a pretty good idea of whether the momentum is slowing. So if I'm comparing this to this versus, so this is really the first higher high, because you made a move here and then pull back, and in the new trend, you just made a higher high. So I'm going to kind of compare this distance to this distance and how far this went compared to how far this went from that prior peak. It's stronger. This went farther than this. Now this wave I would consider this to be losing a little momentum. Now it's still pretty strong because you made a move from, low 100s up to 120, 122. I mean, it's still a solid trend, but if I'm looking at degrees, it's starting to lose a little bit of momentum. Now you pulled back. Now you've gone to a new high. Now, if I pull back from here, you can see that the distance from here to this recent peak is very, very small. That would tell me that there's definitely momentum loss if we turn down from here. We haven't done that yet, but if we do, I would consider that to be a sign based on price alone that the momentum is slowing. So you can use the waves this way to help you determine the trend. Obviously, every time we make a higher low and a higher high, we're continuing the trend. I mean, this trend has been in place now, really confirmed since about 80, and you've been making, let's call it, say, the middle of 2018, and since that time, you've continued to make higher highs and higher lows. So, this trend is getting, for a weekly chart, it's probably getting somewhat mature because you haven't taken out a prior low, a weekly low in a long time. I mean, this is gone over a year. And, I would say you just want to be aware of that. Every time you try and take any kind of a long trade, in this scenario, I think it's higher risk now because it's been going on for a while. Looks like the momentum potentially could be slowing here. So you just kind of want to be aware of these things. But continue to go through the process of doing your 1, 2, 3 change in trend on a number of charts. Take all the moving averages off. Go through, try and identify tops and bottoms. Look for a trend reversal. Go through your 1, 2, 3, say this is where I would have entered. And a good way to do it actually is to go bar by bar this way and analyze what you would have done. Would you have drawn a trend line in? Okay, where is my entry point going to be? And sometimes, you'll get these huge bars because it's going to give you the entire bar at once, but it's still going to be very, very helpful. Because in your mind, you're going to know what you were anticipating. So these are the types of things I think you want to get better at before we start getting into indicators such as the moving averages and momentum indicators such as MACD and ADX.